Bang! What is up, folks? Welcome back to another edition of the Daily Crypto Byte. Today is Friday, November 12th. We got plenty to talk about today. Bitcoin may be selling off a little bit, but as Doc's name implies, there are some assets that are ripping up, Mana included, one of our dojos of the day yesterday. Algo also making some nice moves here. But CJ, Bitcoin starting to see some signs of distribution. One of our favorite analysts on Twitter, Will Clementi, put out a bit of a bearish tweet, and he is getting attacked by the bulls on Twitter. I know you can relate to this. Anytime you put something bearish out there, people don't like it.
I didn't think it was all that bearish. I thought it was like responsible to just show the data of what's actually happening. I think the important thing to understand is that the particular metric he was highlighting is something that typically takes months to play out, if not like 5 to 6 weeks. So I still think that gives us runway into the latter half of Q4 and then earlier on into Q1. But let's talk about the chart specifically. And I have another chart to complement the one that Will posted to help bring a little bit more of context to how to play the market. So this was the first one Will had posted. And you can see that, all throughout our uptrend, we began to saw a flip in the long-term holder net position change from positive to negative. Long-term holders began taking profits when Bitcoin broke above its previous all-time high, roughly in November of 2020. Nevertheless, this was a process that was a pretty long time. Really until our top, we still went up about 40%. So even though this long-term holder distribution can occur, it's not, a concern of mine yet in terms of like ending the bull market or whatnot. As you can see, we've just ticked negative. So the second chart that I want to add to this to give a little bit more context for you guys is one from Whale Maps. And this is not just on Whale Maps. I believe Glassnode and a lot of other data providers have it as well. But this has to do with the realized cap hodl waves that also incorporate the longer term holders. And so although we do see distribution, it is a gradual process, like I said. With the beginnings of distribution that we're seeing, we're only seeing the long-term coins move less than 20%. Once that long-term coins start to move in a much higher frequency, a higher frequency like up where our previous tops have been at about 30 to 40%. Our most recent one you can see was about 37% before we recently experienced that distribution and the subsequent crash in May. But we're not there yet. We're still, it looks like 10%, 15%. So we're about halfway to that cautionary zone, I guess you could call it. But as of now, it's interesting that it's began, but I still think we have 30 to 60 to 90 days of potential runway. So we'll see. I mean, trend is a little bit weak, but what are you thinking about Bitcoin today as we do kind of sell off a bit here, Monty?
Yeah, CJ, I think you nailed it. Whenever we see those first signs of distribution, it is typically an indication that the long-term holders are taking profit, which is totally normal. They buy into weakness and sell into strength. That's what we saw earlier in the year. We're seeing it here again now. So I'm not too concerned with that. But one thing that is very important, CJ, when we start to see that market dynamic develop, is we need retail participants to step in and absorb that supply that the long-term holders are distributing onto the market. And right now, it doesn't feel like we have the momentum necessary for the retail traders to absorb that supply that's being distributed by the long-term holders. So I'm looking for a point at which we may start to see, the retail crowd really step in, start to buy that distribution. And looking at the Bitcoin chart here, we do look a bit overextended in the short term here. We are a bit diverged from this moving average. We were comparably diverged from this moving average, just a few weeks ago here in the middle of October, and we had a week of correction, pulling back, wicking all the way down to this 20-period smooth moving average before continuing our climb higher into new all-time highs. So, I hate to kind of have a negative outlook for this weekend, but I think that based on what we're seeing now in terms of on-chain distribution, in terms of sell pressure hitting the market hard in terms of this technical overextension on Bitcoin. Also we've seen people pointing out in our community that the oscillators are turning down, the CCI is turning down a little bit here. So I would not be too surprised if we did retest perhaps the 60K and even wick down to the 58K level, comparable to what we did just a few weeks ago here. That's just based on what we're seeing in terms of, like CJ pointed out, the long-term holder net position change. These people are starting to take profits. They're starting to distribute a little bit. And I think that can put some pretty heavy sell pressure on the market in the interim. But like CJ said, in the long term, I think that, this bull market still has 3 to 4 months left based on the fact that the distribution is just beginning now. So I'm not too concerned. But I think that this weekend, we could see a little bit of blood on the streets based on, everything technically, fundamentally. And Doc, the DXY continuing to make new all-time highs, looking very strong. Any thoughts on that and, how that may affect the market next week?
Well, let me hit a couple others first, Monty, and then I'll gather my thoughts on that. First, I'd say the fear and greed index hit a 77 yesterday. Last week, it was 73 average for the week. Last month, it was 70. So we've moved up pretty dramatically on that. And the higher, I think most of you know, but the higher it goes, the more greed we see in the market. The lower that index goes, the more fear there is. So when it's at 40, where it was, or even 20s, where it was in late June and July, those are, extreme fear, which are usually good buying points. When it's up here in the 70s, and as I said yesterday, high 70s, that's when people are really getting greedy. So I would think, guys, that depending on, I've got to check the open interest on the puts, but if people have really piled in and sold a lot of those puts, especially people doing 10s and 20s of that, in other words, non-institutional size trading, then I think we could see a quick whoosh to the downside, but I think it would be temporary, just flush some people out and then come back. But I do think you sort of need to break the fever a little bit when you get up here into the high 70s for greed. Another example is volatility. You guys remember that we were talking about at the beginning of October, we were, 410, 420 as far as a percent. So this is not the same as the greed and fear index. This is like, a different way of looking at it. A 4 reading for that would be 4 times 16, or 64 plus. Obviously 16 is 32, double that up again, that's 64. So a 64 versus a 15 or 16 for the S&P 500. So it's pretty significantly higher. It has come all the way down now, guys, to where today's reading is 3.05. So both of these are implying that we're getting a little cocky. And I think usually that means that we're about to, experience a little, doesn't have to be a lot, but a little bit of a correction here. So for those of you trading rather than just hodling, I would say be careful. You might either write calls depending on how aggressive you want to be, or if you're somebody who's already taken, who already has a taxable event, meaning that you've bought at lower and sold at higher and so forth, so you're going to have taxes due on that. I'd say trade here because I think that would be the more prudent thing to do. When vols get low, I am always the guy that says, I look for a dip here then, and I'll buy on that dip the asset. I'll buy futures and I'll sell calls against it because that's what I'm waiting for right now. Maybe we get that this weekend, guys, to your points. And if we do, I'll get to take advantage of that. When vol is high, on the other hand, when it's in the 4%, that is, instead of 48, when it's up there in the 4s or whatever, that's when I want to get in there and do a different strategy. So anyway, that's where I am right now with this. I haven't really thought too much about the DXY, to tell the truth, but I do see that we are at a long-term dollar versus euro dollar low. We got down all the way to almost 113 dollar to euro dollar. We'd been as high as 124 on the highs of the year, so which was in January. So the dollar has definitely picked up a lot of strength versus the euro, especially in the last 3 months.
Yeah, that's been interesting to watch. I think it's definitely having an effect on the crypto market as well here as we close the week up. But I want to look to next week and a piece of news that I think could serve as a potential positive catalyst for some price action. This is something that's been in the works for quite a while. Lots of Bitcoin maximalists are very, very excited about this, and that is the Taproot update. It's only a few days away here, and essentially, we could talk all day about Taproot. We could do a 2-hour webinar about what this really means for Bitcoin. But essentially, the goal here is to make Bitcoin more scalable, more efficient, and basically widen the potential utility of the asset. So, right now, one major criticism of Bitcoin is, the inability to, spend it on everyday items or transfer it, efficiently and quickly. It is a great store of value due to its provable scarcity and supply and demand mechanics. But one thing that is often criticized is the kind of clunkiness in sending Bitcoin. But that is potentially changing here with Taproot. There is lots to look at here, but essentially, they're changing the way the UTXO set works. They're changing the way transactions are being verified. This has been a long work in progress, over 7 years in the making. Lots of Bitcoin core developers have been working on this, diligently over the last 7 years, and consensus was gained just recently, earlier this year. So this soft fork is going ahead, and I think, in my opinion, this could potentially be a massive catalyst for positive price action. We talk all the time, and people talk all the time about what's going on in Central America and Bitcoin being used as currency down there. This too will also benefit that. This will make the Lightning Network much more efficient, much more possible to use and everyday purchases. One thing that's often criticized is kind of the lack of fungibility. This would definitely improve that. So, whereas right now Bitcoin is mainly seen as a store of value, this Taproot update could really take it to more of a spending currency and something that is easily transactable, which I think is a massive plus for Bitcoin. So we'll be watching this only a few blocks away from this update going live. And I think it could definitely be a catalyst for some positive price action.
I think the interesting thing about Taproot as well is that it's anticipated to lay the technical foundation needed to, accelerate like a transition to DeFi, or be able to enable certain DeFi applications on top of Bitcoin, which has previously not been possible because of the inflexibility of the network. So it's going to be interesting to see how that develops and what kind of ecosystem potentially grows on top of it. But like you said, Monty, there's a ton to break down there. Really a lot to get into the weeds with in terms of like technical details and things that they're updating to the network. But we'll see if it serves as a potential catalyst to price. But speaking of other potential catalysts to price, I want to ask a question to Jon, and just what are your thoughts on this potential BTC spot ETF? You think its approval is already priced into the market, or do you think that it's just kind of something that's uncertain right now?
I wouldn't think that that's priced in, big guy. You might have a much better handle on it than me, and that wouldn't be surprising to anybody that you have a better handle on it. Yeah, I would not think that that's priced in a spot ETF. As we know right now, the ETFs that have been approved for domestic, for US, are only on that CME future. We've not seen something else approved yet. So to have a Bitcoin spot would be very interesting. And I would think that would be a much bigger impact than we've seen so far.
Yeah, and to your point, Doc, I don't think it's been priced in either because when we saw that Bitcoin futures ETF get approved, we saw a big pop on that news. I think a spot ETF could be a lot different in the sense that it could provide a genuine injection of new capital into the space. There are a lot of people sitting on the sidelines right now waiting for a more legitimate vehicle to invest their capital into, and I think a spot ETF could be something that a lot of family offices, a lot of wealthier individual clients are waiting for in order to get exposure to Bitcoin. So, I don't think it's fully priced in yet. I think that could be, a very nice injection of new capital into this space. So I completely agree. But I think that's all we got for today. Should be a pretty interesting weekend here. Lots to be on the lookout for. We are a bit overextended here, but we'll be watching those critical levels, looking for some support and some rebounds of strength over the weekend. Last weekend, we actually saw some strength on a Sunday, a bit unusual, but would not mind seeing that again this weekend. But as always, CJ and I will be hanging out in the crypto room. If you guys want to stop by, ask us any questions about any assets, participate in the chat. We have thousands of traders from all around the world. The chat is open 24/7. So if you're done trading equities on Friday today and you're looking for something to continue trading into the weekend, get your fix, drop by in the crypto room because crypto never sleeps, and neither do CJ and I. And if you guys want to, trade on a broker that offers some of the best interest in the industry, recommend you check out Voyager. You can earn up to 12% interest on assets like DOT, up to 9% interest on assets like USDC, a stablecoin. So head over there and check them out. They are the sponsor of this show. And if you do, use code Rebel25 for $25 free in Bitcoin when you sign up. But that's all we got for today. Any parting words for our audience as we enter the weekend, gentlemen?
Be patient, especially if you, like you heard Monty say, maybe we see, it holds 60, maybe we have to test 58. I think you can be patient rather than jumping in at the first little dip if we get a dip.
Yeah, if you like this today, please hit that like button and subscribe to the Market Rebellion YouTube channel. It's free. Monty and I will be doing another in-depth analysis very shortly after this, known as Doge of the Day. We've now moved that one behind the paywall for Market Rebellion members only. You can try that first week for just $7 at the link below in the left corner. But we appreciate that, guys, and we'll be doing that very soon. But nothing left from me. I hope you guys all have a wonderful day in the world wherever you are. But take